All right, today is Black Friday. I hope if you celebrated that you had a good Thanksgiving yesterday. Hope you enjoyed the food. Hope you spent time with your family and really appreciated what you have. And today is Black Friday. There are lots of deals going on right now. And if you watch my channel, you know that I've been using the indicator market cipher for about 2 years now. And I use it in many different ways. I like to use this indicator for my higher time frame analysis. I like to use this indicator for lower time frame scalps. I use it for confirmations. I also use it to manage my trades. I follow the money flow. I've found that this indicator has been very helpful for my trading. Even when I'm using strategies that don't necessarily require it, it still can be helpful because I think it is pretty consistent and it gives good information. It can't be right 100% of the time. Obviously, things happen. There are many different factors that go into what price does, but I think Market Cipher is very accurate, and specifically, I like to use the money flow for just kind of judging price action. And if you go to the Market Cipher website right now, which I do have a link in the description of all of my videos, this is a referral link, by the way, so if you were considering purchasing Market Cipher already, it would be really cool if you decided to use my link that is in the description of my videos. It would help to support the channel. So if you were already considering buying Market Cipher, maybe you want to take advantage of the deal that is going on this weekend. There is a 35% off coupon code that is valid through Monday. So I figured it would be a good time to make this video that I've been wanting to make, which is basically me just going over the Market Cipher basic strategy. Now, I'm not going to claim to be an expert at using this strategy. I used to use it a lot more than I do now, just because now I'm learning new strategies and concepts. And, as I stated in previous videos, that's what most of my energy is going towards at the moment. But this is a strategy that I've used in the past. I have had success with it. And I know many other people do have success using this strategy. It's basically what CryptoFace trades for the most part, unless he, has some other strategies or confirmations that he doesn't exactly like to talk about. But, anytime I see him in a massively profitable trade, when he explains how he entered it, it most of the time is just using Market Cipher basic strategy. Now, this video isn't me claiming to be an expert on the strategy. I'm not going to be able to tell you exactly what works and what doesn't work. This is basically me going over the basics of the strategy and how I have been able to use it. And if you'd like to learn more about this strategy other than just what I talk about in this video, there are tutorial videos on the Market Cipher website. If you go to learn and you click on tutorial videos, there are many videos going over this strategy. There's this one, Market Cipher basic/core strategy. There's this series where CryptoFace goes over basic strategy, and there are many other tutorial videos on this website. So basically, I've watched the Market Cipher basic strategy videos over again. It's been a while since I watched them, but I went back for a little refresher. And in this video, I want to give a basic explanation of this strategy. I want to go over some other things that I think are very important to have in conjunction with this strategy. And I'll go over the confirmations for this strategy and some extra confirmations that can give more confidence to the strategy. So first off, my kind of botched little summary of the strategy. This strategy utilizes MCB to determine a confident bias when all of its requirements are met. You are looking to capitalize on a shift of momentum and money flow on a specific time frame, and ideally other time frames back it up. This strategy can work on all time frames. I've seen examples of CryptoFace going on the 30-second and showing how this strategy can work on low time frames. I actually just clicked onto the 1 minute for Bitcoin, and I noticed a decent example of this strategy that actually just produced a pretty aggressive move. We had the Market Cipher basic strategy right here. Now, not perfectly. There are some things that could have been better with the strategy. However, we got most of the confirmations, and from the point where we printed this trigger wave, we got a pretty aggressive move to the downside. So this strategy can work on low time frames. It can also work on higher time frames. I like to watch multiple time frames to try and determine the strength of the expected move and how long I think the move will last. So let's say I'm looking at the 1 hour time frame and I'm starting to see confirmations of the strategy, I like to look at the time frames around the 1 hour. So maybe I'll go a few time frames up. I'll look at the 2 and the 4 hour, and I'll look for things that either back up my idea or invalidate it. And I will make my decisions off of not just the one time frame I'm looking at, but all the time frames around it. I will look at the time frames lower than the 1 hour, like the 30-minute or the 15-minute. I want to make sure that they are also backing up my idea. Because if things look good on one time frame, like we'll use the 1 hour for example, but they are not looking so good on the 4 hour, maybe the 4 hour doesn't look like it's bottoming out quite yet, and then you go to the lower time frames like the 30 and the 15, and they kind of already had some bullish momentum and money flow play out, but now they're starting to turn back to the downside. Those kind of things can happen. You know, you can have confirmations on one time frame, but the other time frames around it are not backing it up, and that usually results in a very short-lived or a weak move. The stronger moves typically come when multiple time frames are pointing towards the same thing. And lastly, the way that you trade using the strategy will be unique to you and unique to each situation. Now, the way that I trade this strategy is different than the way that CryptoFace trades this strategy. And, you know, sometimes I will sort of trade the CryptoFace type way, which I guess is really putting a lot of faith in your indications and your judgment of your indications. And that works very well for him. You know, I've seen CryptoFace be very confident about a move based off of what he sees on Market Cipher, and he will absolutely just fire on that. And, you know, he's willing to put some capital up for risk in order to really capitalize on that judgment. But the type of trader I am, I like to come up with a much more clear-cut plan for my invalidations, for my targets, for how I'm going to de-risk the trade, for how I'm going to lock in profits for the trade. And, you know, all of those things help to decrease the impact that short-term decision-making has on your trades. You know, someone like CryptoFace is very good at determining when he should be taking profits, when he should be holding the trade for higher, whereas, you know, I can do that. I can watch Market Cipher and follow the money flow and try and make the best judgment as to when I should take profits or when I should cut the trade at a loss, maybe when it seems like things are going against me. But I'm not to the point where I can trust myself to do that consistently. And so, for the sake of consistency, I like to stick to my trading plans. And most of the time, I like to come up with trading plans on lower time frames that could potentially allow me to capitalize on higher time frame moves. And it's going to take you a long time to develop your own trading style. It's going to take you a long time to figure out what type of style works best for you. And, you know, I recommend just practicing a lot before you even ever expose yourself to risk using this or any strategy. I think it's important to be confident in your ability to trade and have confidence in the strategies that you use before you ever expose yourself to actual risk using them. So now, some skills that I believe are necessary to have when using this or any strategy is, first off, risk management. And I'm not going to go too in-depth with all these things because I can talk about these for an entire video and for multiple videos. You know, I can go on and on about these things. Essentially, I think having a strategy that you stick to and have discipline in practicing for managing your risk is extremely important when trading. I think it may be one of the most important things when it comes to trading. And you can do that in many different ways. For example, I take a lot of trades. I'll usually take multiple trades in a day. Sometimes I only take one if it's a slow day. But I like to take a lot of trades, and I like to risk a low amount per trade, which is typically between 0.5% to 1% of my trading capital. And that's the way that I've found works best for me, because typically I'm not losing, 4, 5, 6 trades in a row. Typically I'll maybe lose 1 or 2 trades, take a 2 to 3% loss, and then within the next trade I can have a 2 or 3% gainer, and then I'm at a break even. That's an example of how risk management can help you if you're having a bad day of trading. Next is the ability to plan out your trades. So for me, this comes down to, number one, just in general, having a plan for your trade. What are the reasons that you want to take this trade? What are the confirmations that you're going to look for? What is your entry going to be? What are your invalidations going to be? And, your invalidation can change as the trade goes on. When you first enter a trade, your invalidation is going to be your stop loss. So, whatever point you think your trade idea is going to be wrong, that's your invalidation. And as the trade goes on, let's say you're in profit, your invalidation may change to, okay, if we break market structure against my trade, that is my invalidation, and that's the point where I'll get out. So you need to be able to first have your invalidation for your original trade idea, and then be able to manage your trade and essentially come up with invalidations as the trade progresses. You need to be able to identify your targets for your trade, whether that's a price level target or if it's a target in your indicator. Maybe you're waiting for money flow to go from the red to the green, and once it gets pretty thick in the green and price starts to slow down, that's when you'll close your trade. So you need to be able to come up with your targets, and there's probably other things that go along with trading as well, such as profit management. That's another important thing. I like to take partial profits at the significant levels. Obviously, this depends on the type of trade it is. If it's a scalp trade, I'll be taking profits more aggressively. If it's a high confidence swing trade, then I'll probably be less aggressive with my profit taking unless I see a reason to. So these are all things that I think are very important for anybody to practice regardless of what strategy you're using. I think these are just skills that have definitely benefited my trading. So now that we got that out of the way, let's get into this actual strategy. So what is this strategy, and what are the confirmations that you want to see for this strategy? Well, quickly I'll look at some examples, and essentially what you're trying to do with this strategy, like I said in the beginning, you are looking to capitalize on a shift of momentum and money flow. So you want the momentum and money flow to be overextended essentially on one side, and you're looking to capitalize on the shift back up. The way that market Cipher works is it works in waves. You'll have waves down, waves up, waves down, waves up, waves down, waves up. You're looking to capitalize on these shifts in momentum. And the way that you do that is by looking at the momentum waves and the money flow. So the momentum waves are the gray waves, and the money flow is this blue that turns into purple as it crosses under the zero line, turns blue as it crosses over the zero line. Once you get market Cipher for yourself, these will be different colors. Obviously, I changed the colors on mine. The money flow will be red and green. The momentum waves will be blue. So the first thing that you need to see for this strategy is an anchor wave. What is an anchor wave? Well, an anchor wave, I am talking about momentum waves here. So an anchor wave is just going to be a wave that is very overextended to one side. And the way I kind of judge that is I look at these lines that are above and below the zero line. These are the 60 and the negative 60 line. If you look to the right hand side of the screen, you can see the numbers. So in general, if a wave gets past the negative 60 line or the 60 line, I will consider it an anchor wave. It just means that this momentum wave has gotten very overextended, and the idea of these waves is that they typically mark a bottoming point or a topping point in momentum. Next, you need to see money flow showing clear direction. Now, for this strategy, what you typically want to see is you want to see, as the anchor wave prints, you want the money flow to be either already in the red or coming down into the red pretty significantly. And obviously it's vice versa for if you're looking for shorts, you would want the money flow to be coming up or already pretty much in the green. And then as time progresses, you want to see the money flow begin to trend towards the zero line, essentially showing like a curvature, showing that the money flow is shifting direction. So originally it was coming down here, and eventually it starts to curve back up towards the zero line. So this is what I mean when I say money flow showing clear direction. You want money flow to be moving in the direction of your trade idea. So in this example, you had the anchor wave first. Money flow was still decreasing for a while after we put in that anchor wave, but it did eventually begin to curve back to the upside. And next, you need to see a trigger wave. So a trigger wave, again, looking at the momentum waves, if this is the anchor wave, then the trigger wave is just going to simply be a wave that shows direction from the anchor wave. You can see that this wave is clearly much smaller than the anchor wave. It is showing direction upwards. This would be considered a trigger wave. Now let's manipulate this example just a little bit. Let's say we printed this anchor wave here, momentum came up and came back down, and we printed a wave like this. Let's say this wave got below the -60 line. Would this be considered a trigger wave or an anchor wave? Well, it could technically be both. Now, it could be a trigger wave because it is showing direction from this wave. It is still putting in a higher low compared to this wave, therefore it can still be called a trigger wave to this anchor wave. And if momentum continues, let's say it does something like this and maybe prints a tighter wave after coming back above the zero line, we'll get rid of the arrow. Now, this wave right here, this one that I marked out with this arrow, can be considered an anchor wave to this trigger wave. So it can be considered both. It is both a trigger wave to this anchor wave, and it is an anchor wave to this trigger wave. Or you could just look at it as both of these are trigger waves to this anchor wave. You can have multiple trigger waves to one anchor wave, and I would probably look at it more so in this way because you're seeing direction from the original wave. So very simply, that is what anchor waves and trigger waves are. A wave can be considered a trigger as long as it shows direction from an anchor wave. And you can have many trigger waves. You can have like 7 or 8. Even though this isn't very common, you can technically call all of these trigger waves to this anchor wave. And obviously, if, let's say, we continue this example, so we got a trigger wave to this anchor wave, if momentum now comes down and prints a lower wave, there's a good chance that this momentum shift is over, and now you're going to be looking for a new momentum shift. You've printed a new anchor wave. Now you're going to look for momentum to begin building back up in the same direction later if you're still looking for longs. Basically what you want to see is you want to see that clear direction with momentum, and you don't want it to really void that unless, maybe you could come down and put in a lower low to this trigger wave, and you still could call this wave over here a trigger wave to this anchor wave. But in general, the better the direction, the better the trend line of momentum that you can draw, the better strength it's going to have. So if momentum comes down and prints a really tight trigger wave here, I'd say that's a pretty solid confirmation for continuation, just because the direction of momentum increasing is being respected. Alright, so now that we know what the basic confirmations are, let's get a little bit more complex with it. So what are the confirmations that you would look for to give more confidence to your idea? Well, first off, you would look at the money flow. You would judge how the money flow looks and use that to determine your confidence in the idea. What you really want to see is you want to see deep money flow typically. You want it to be a kind of deep retracement, right? You don't want something like this where it was like a really tight money flow wave in the red, and there's not much strength behind it. There isn't a lot of data to go off of to be able to judge this move. Typically you want the money flow to be well established on one side of the zero line. So for example, I'd say this is pretty well established above the zero line. This is pretty well established below the zero line, even though it's not showing the best curvature. Like if Moneyflow put in like a deeper low here and then began to curve up, that would be better. But it's still pretty well established in the red. It's been in the red for a while. And, you can start to see the overall shift as it starts to curve to the upside. So you want Moneyflow to be deep on one side and is curving towards the zero line. So that's that curvature I was talking about. Just like with momentum, how you want to see a clear direction, you want to see that clear direction in Moneyflow as well. And that is what is going to give more confidence to basically the idea that momentum and money flow are shifting. Next, you want to see a deep anchor wave and a trigger wave that is tight to the zero line. So in parentheses here, I could just type good direction, because that is the more important thing, I think, is as long as it's showing good direction with momentum, I'd say that's, pretty good for having confidence in it. But typically it is better if you have a deep anchor wave and then a tight trigger wave. So going back to this example, I'd say that this anchor wave is pretty deep. It is, well below the -60 line. We even got some BitBoy green dots down here showing, a bit more strength to the bottoming of momentum here. And then you get a pretty tight trigger wave pretty close to the zero line, showing good direction. There is like a clear and pretty strong increase of direction here from the anchor wave to the trigger wave. Now, an example that maybe wouldn't be so good, if I can find one, I'd say maybe this one because this trigger wave came a bit lower, but I think the curvature of Moneyflow and just based off of how this momentum seems to continue, I think we may have gotten a decent move off of this. Now, I'm not looking at price action. I don't know what price action looks like here, but we can double click out of this and see what happened here. But yeah, okay, so this was a pretty weak move. Momentum was showing pretty decent direction, but yeah, you can see that overall just because, there wasn't a super strong shift in momentum or money flow really here. I mean, there is good curvature, but money flow wasn't really that deep in the red. It wasn't in the red for that long. And we'll get into RSIs in a little bit, but the RSIs were all over the place here, so that should have been another sign of weakness essentially. But yeah, I mean, this is, I guess, a good example of a kind of poor anchor wave to trigger wave setup. Number one, the anchor wave isn't very thick. I like to take thickness into account when I'm looking at anchor waves. So, you could call this a thick anchor wave, and you can call this a very thin one, I guess. I haven't really back-tested the effect of thickness on the momentum waves, but I guess in general, just kind of thinking about it now, the thicker they are, typically the stronger they are for a bottom. And I'll say pause on that because that might have came out the wrong way. But I'd say, typically the quicker and more jagged the momentum waves are, probably the less confidence I would have in them, especially if there are other things kind of showing weakness, such as the RSIs and the trigger wave not exactly printing super close to the zero line. Those are all things I would have taken into account there. So here is actually another decent example of not showing great direction at first, but eventually we did get that good direction. So, maybe you were looking at all of this and saying, oh, is this a trigger wave to this anchor wave? Oh, is this a trigger wave to this anchor wave? Or maybe is this one a trigger wave to this anchor wave? Or is this one a trigger wave to this anchor wave? Well, I would look at other tools to try and determine strength from this. And number one, Moneyflow is very thick in the red, and, granted at this point it was curving back to the upside kind of aggressively, but overall Moneyflow is pretty jagged here. It's kind of like showing like the teeth effect, where it's getting these jagged moves back to the upside, but not crossing over the zero line. And overall, if you kind of just outline the direction of this, it's pretty much flattening out and actually putting in slightly lower lows over here. So that is not a good sign for Moneyflow. It would have been better if it was like, pretty good curvature. It was thick over in this part where we were actually bottoming out and then began to curve back to the upside more clearly. But what we did have eventually is we did have a nice looking trigger wave to this anchor wave, or, regardless of which wave you call the anchor wave, I guess you could have measured it from back here and said, okay, here's the direction I'm looking at, and either this is the trigger wave that I'm looking at, or this is the trigger wave that I'm looking at. And as both of these trigger waves were printing, you can start to see the direction of Moneyflow curving to the upside, and it actually crossed into the green when this trigger wave printed, so the Moneyflow was showing decent direction, although not the clearest, right? Like I said, it was kind of jagged. There is a chance that it curves up here and then just begins another tooth effect, right, where it just curves back down, continues being jagged like this, but you can at least see a decent direction here from this low up to where it crossed and where we printed the trigger wave. And ultimately, it wasn't until these trigger waves printed that a good trade setup was actually presented. At this point, price had been bottoming out for a while, and putting a vertical line on where these trigger waves printed, I think either of those would have been a decent entry for this long. And you can see eventually The momentum definitely did shift to the upside. We got a very aggressive move after this, and I wouldn't expect this good of a move every time you use this strategy. This was, a very good follow through, following what I would say wasn't the best setup, but it was a decent one, and it turned into a decent one really only once these trigger waves printed. But yeah, you can see once we started to print those trigger waves, once Moneyflow curved to the upside, and, also looking at RSIs, I know we haven't talked about that yet, but the RSIs were looking pretty good this whole time. Once the direction of all these things shifted, we definitely got a shift in the direction of price action as well. So now the next thing is the RSIs. Let's talk about the RSIs now, and let's actually go back to that example. So like I said, the RSIs were looking pretty good in this area. If I zoom in here, what you really want to see with RSIs, and I'm no expert on RSIs, I don't really use them that often, but they can be helpful, and it may be something that I start to use more often. And I'd even say this isn't a great example of what you want to see with RSIs. I'm sure I can find a better example somewhere, but what you want to see essentially with the RSIs is you want to see them tight together. So, with the RSIs and MCB, there are two lines, and at a certain point you will see that it looks like they're only one line. They're basically overlapping each other. They're at the same point, so it looks like there's only one line. You can see that here as well. You can only see one line visible. So that is basically what you want to see. You want to see them tight together, and you want to see them hugging the top or bottom end of MCB. So the RSIs do not go below the zero line. So when I say the top or bottom end of MCB, the top end would be up around here, and the bottom end would be around the zero line, basically in this area. And typically, a sign of strength from the RSI, if you're looking for a long, would be it hugging the low end and basically the RSIs being very tight together and only looking like one line. Now in this case, as you zoom in, you can see there are points where it kind of looks jagged. They separate for a little bit, but there are points where they do look like only one line, and they are, very tight together. So this isn't the greatest example, but let's see if we can find another example of, when they're very tight together. And here is an example right here at this top. The RSIs basically became one line right here. And pretty soon after that, you can see they got a very aggressive move to the downside. I'd be willing to bet this was a pretty sharp dump if I look at price action. And yeah, it absolutely was. So yeah, I like to use the RSIs sometimes for judging strength of a move. More so on the higher time frames, I like to use the RSI, but I still have to practice using that more, so maybe I can find better ways to use it, but that is essentially the basics of how you use the RSI. And finally, what I think is kind of like the icing on the cake or the cherry on top of this strategy is the VWAP and how it curves as the trigger wave to the anchor wave prints. And this, the good VWAP curvature as the trigger wave prints, is something that CryptoFace has talked about a lot in his, recent videos. And I've actually found this to be a very powerful final signal for this strategy, paying attention in great detail to how the VWAP curves as the trigger wave prints is pretty important for this strategy. And this video is already getting very long, so I don't want to take a look at too many examples here, but I will use this most recent example of the basic strat that we got here. So we did have what I would call a decent example of the basic strat here. We had a very deep anchor wave. Moneyflow was deep in the red for a decent amount of time. Not the greatest curvature, but it isn't bad either. Like, I think the only thing that would have made this better would have been if the Moneyflow was deeper in this area and then began curving up like this. That would have looked better. However, this doesn't look terrible. It kind of flattened out here and then began curving up towards the end. So this still was definitely usable. Now, paying attention to the trigger wave and this yellow tool, which is the VWAP, and paying attention to how the VWAP crosses the zero line as the trigger wave prints is what I'm really focusing on now. So basically, as the VWAP crosses the zero line, that is when you will print the green dots or red dots. If it crosses down below the zero line, you can kind of mark out all the dots and you can see that VWAP cross the zero line right before all of these dots print. So green dot, VWAP crossed, red dot, VWAP crossed, green dot, VWAP crossed, red dot, VWAP crossed. So yeah, for every one of these dots, the VWAP crossed the zero line. Even right here, you can see it kind of messed around the zero line. Maybe it even didn't cross here, but in general, once the VWAP crosses, that is when the dots will print. So if I was looking to enter on this trigger wave, what I would be paying attention to for the final confirmation essentially would have been how the VWAP crossed the zero line. Now, this is something that takes a bit of practice to really get a grasp on, but essentially what you're looking for is you're looking for every tick of the VWAP to be increasing in sharpness and continuing to curve in the direction that you want it to. So the way the VWAP works is every hour it kind of changes, and it can change in between the hours, like it can continue to move, but every time a candle prints on whatever time frame you're looking at, the VWAP will basically update. So from the bottom of this VWAP to this next place that the vertical line moves over to, that is 1 hour, and then you have 2 hours and 3 hours after the 3 hour mark. That's when it crossed over. So essentially what you're looking at is you're looking for the angles of the VWAP to be increasing and continuing to curve in the direction that you want. Now, what can you see in this example? Well, like I said, we have 3 hours before the VWAP went from basically where it bottomed to crossing over the zero line. So we have 3 angles that we can look at. So we have angle 1 here, we have angle 2 here, and we have the final angle from this hour to when it crossed over the zero line. Now, if you really zoom in here, and I hope that the trend lines that I drew can show this, from this point, the point where the VWAP bottomed, to this point, we had a decently sharp angle, and then it became even more sharp during the second hour. So this kind of transition here from this angle to this angle is what we want to see. This is showing decent curvature, showing that overall the momentum is continuing to the upside, even though my brush does not do it justice. Essentially this angle is more sharp to the upside than this one. But towards the very end, and you have to really pay attention for this section right here, where I drew that box, the angle curves outwards slightly. It's hard to notice, but it is a slight curve to the outside, a slight decrease in momentum, you could say, and it is a slight sign of weakness. Now, if you're zoomed out, overall, you would say that this VWAP still has pretty good curvature. You maybe could ignore that last little hiccup right before it crosses zero line, and you could have said, okay, overall, this VWAP still has pretty decent curvature, right? It's not terrible. An example of like a terrible curve would be this, where it is clearly curving to the outside, and you can see from there, it basically got rejected before it even crossed the zero line. So yeah, it doesn't look bad. It is still showing curvature inwards, which is what you want. You want inwards curvature, whether it's on the top or the bottom. You want the top to have inwards curvature as well, basically curving in towards itself rather than outwards. So essentially, you want the VWAP to continue increasing in bullish direction, and by that I mean it's continuing to curve in the direction that you want as it crosses the zero line. So this is another good example of a good VWAP curvature as a trigger wave prints. This was continuing to get at a sharper angle as it crosses zero line, and then you can see from there the VWAP got a very aggressive move to the upside. Now, this was unfortunately at a poor spot because Moneyflow was still decreasing at the time, so I would not call this a signal, but it is a good example of what you want the VWAP to look like. And this one over here is not a bad example, but it's a example. I'll call it an example. And another thing that I probably would have noted here was the fact that the RSI was at the time of this trigger wave hugging the high end of market Cipher B, so that is also not a great sign. However, I think just based off of the trigger wave and the Moneyflow finally getting good direction, I guess it started getting good direction a little bit after the trigger wave printed, or maybe just before it is when the direction started. So maybe in this case you would have waited for the Moneyflow to show more clear direction, But overall, this is not a bad example of market cipher basic strategy here. So that was pretty much the basics of the market cipher basic strategy. This video is getting very long, so I will probably cut it here, and I want to make some follow-ups to this video, some follow-ups where I go into more detail with some examples, where I actually take some trades and show how I use this strategy, because I do use this strategy in many different ways, and it depends on, the time frame that I'm seeing the strategy on and all the other time frames around it. Sometimes I trade the strategy directly, sometimes I don't. Sometimes I'll just kind of notice the momentum shift and then start looking for scalp trades in that direction. So I will definitely be making some follow-ups to this video. So thank you all for watching the video. If you enjoyed, please consider leaving a like, subscribing, and leaving a comment. All of that helps to support my channel, and I really appreciate all of you for doing that. And I will see you all in the next video.